Welcome back to Millionaire Advisor, your trusted source for financial education. In today's video, we're diving into the world of Bitcoin, the revolutionary digital currency that has captured the attention of investors and tech enthusiasts alike. Join us as we unravel the mysteries surrounding Bitcoin, explore its technology, and discuss its potential impact on the future of finance. If you're curious about Bitcoin and how it works, you're in for a treat. But before we begin, make sure to subscribe to our channel, hit that bell icon, and share this video with your friends who are also interested in learning about stocks. By subscribing, you won't miss out on our future videos that provide valuable financial insights. Now let's get started. What is Bitcoin? To understand Bitcoin, let's start with the basics. Bitcoin is a decentralized digital currency, often referred to as a cryptocurrency. Unlike traditional currencies issued by central banks, Bitcoin operates on a peer-to-peer network without the need for intermediaries. It was created in 2008 by an anonymous person or group of people using the pseudonym Satoshi Nakamoto. Bitcoin utilizes blockchain technology, which is a distributed ledger system that records all transactions in a transparent and secure manner. The blockchain is a chain of blocks, with each block containing a set of transactions. This decentralized nature of the blockchain ensures that no single entity has complete control over the network, making Bitcoin resistant to censorship and manipulation. One of the key features of Bitcoin is its limited supply. There will only ever be 21 million Bitcoins in existence. This scarcity is achieved through a process called mining, which involves solving complex mathematical problems to validate transactions and add them to the blockchain. Miners are rewarded with newly created Bitcoins for their computational efforts. Bitcoin transactions are pseudonymous, meaning that users are identified by their unique wallet addresses rather than personal information. This offers a certain level of privacy. However, it's important to note that all Bitcoin transactions are recorded on the public blockchain, making them visible to anyone. Bitcoin offers several potential advantages over traditional currencies. Transactions can be conducted quickly and securely, often with lower fees compared to traditional banking systems. Bitcoin also enables borderless transactions, allowing users to send and receive funds globally without the need for intermediaries or currency conversions. While Bitcoin has gained popularity as a digital currency, it has also garnered attention as a speculative investment asset. The price of Bitcoin has experienced significant volatility, attracting both investors seeking potential high returns and critics cautioning about its unpredictability. As with any investment, it's essential to understand the risks associated with Bitcoin. Price fluctuations, regulatory changes, and security concerns are factors that should be carefully considered before engaging with Bitcoin as an investment or means of exchange. The birth of Bitcoin. Bitcoin didn't appear out of thin air. We'll delve into the story behind its creation and the mysterious figure known as Satoshi Nakamoto. Learn about the publication of the Bitcoin white paper and the subsequent development of the first decentralized cryptocurrency. We'll also touch upon the early adopters, the first Bitcoin transactions, and the significant milestones in Bitcoin's history. Bitcoin's origin can be traced back to a white paper published in October 2008 by an individual or group using the pseudonym Satoshi Nakamoto. Titled Bitcoin, a peer-to-peer electronic cash system, the white paper outlined the conceptual framework and technical details of the cryptocurrency. Despite widespread interest in Bitcoin, the true identity of Satoshi Nakamoto remains unknown. Some theories suggest that it could be a single person, while others believe it might be a collective effort. Regardless, the work presented in the white paper laid the foundation for a decentralized digital currency. In January 2009, the first block of the Bitcoin blockchain, known as the Genesis block, was mined by Nakamoto. Embedded within this block was a message referencing a headline from the Times newspaper, highlighting the financial crisis of that time. The Times, 3rd of January 2009, Chancellor on brink of second bailout for banks. This symbolic act emphasized Bitcoin's mission to provide an alternative to the existing financial system. Shortly after the Genesis block, Nakamoto released the first version of the Bitcoin software, allowing individuals to participate in the network by running nodes and engaging in transactions. In the early days, Bitcoin had a small community of enthusiasts who actively supported its development and adoption. The first Bitcoin transaction occurred in January 2009 when Nakamoto sent 10 Bitcoins to computer programmer and cryptocurrency advocate Hal Finney. This historic transaction demonstrated the functionality of the digital currency and marked the beginning of a new era in financial transactions. As Bitcoin gained traction, more people became involved in mining and using the cryptocurrency. In May 2010, a famous transaction took place when Laszlo Haniek successfully traded 10,000 Bitcoins for 2 Papa John's pizzas. This event, now celebrated as Bitcoin Pizza Day, highlighted the real-world value and potential of the digital currency. Over time, Bitcoin's adoption grew, attracting attention from individuals, businesses, and even governments. Bitcoin exchanges emerged, allowing users to buy and sell Bitcoins for traditional currencies, further enhancing its accessibility. In subsequent years, Bitcoin experienced significant milestones and challenges. These included the launch of the Bitcoin Foundation in 2012, the increased recognition and regulatory discussions surrounding cryptocurrencies, and the emergence of other cryptocurrencies inspired by Bitcoin's success. The birth of Bitcoin marked a pivotal moment in the world of finance. It introduced a decentralized, transparent, and censorship-resistant digital currency, challenging the traditional financial system and opening new possibilities for financial inclusion and innovation. Understanding blockchain technology. Blockchain is the underlying technology that powers Bitcoin. We'll demystify this revolutionary technology, explaining its distributed ledger system, consensus mechanisms, and immutability. Discover how blockchain enables secure and transparent transactions, and explore its potential applications beyond cryptocurrencies. At its core, blockchain is a distributed ledger system that records all transactions in a decentralized and transparent manner. Rather than relying on a central authority, like a bank, to validate and store transaction data, blockchain leverages a network of computers, known as nodes, spread across the globe. Each transaction made with Bitcoin is grouped together with other transactions in a block. These blocks are linked together in a chain-like structure, forming the blockchain. Once a block is added to the blockchain, it becomes permanent and cannot be altered, creating an immutable record of all transactions. One of the key features of blockchain is its decentralized nature. Instead of a single entity having control over the entire network, the blockchain is maintained and verified by multiple participants, or nodes. These nodes work collaboratively to validate transactions and ensure the integrity of the network. To achieve consensus on the state of the blockchain, various consensus mechanisms are employed, such as proof of work, POW, and proof of stake, POS. In the case of Bitcoin, the POW mechanism is used, which requires miners to solve complex mathematical puzzles. Once a miner successfully solves the puzzle, the block is added to the blockchain, and the miner is rewarded with newly created Bitcoins. The decentralized nature of blockchain provides several advantages. It enhances security by eliminating a single point of failure, as the data is stored and replicated across multiple nodes. This makes it extremely difficult for malicious actors to manipulate or tamper with the blockchain. Furthermore, blockchain offers transparency and accountability. Since the blockchain is publicly accessible, anyone can view the transactions recorded on it. This promotes trust and eliminates the need for intermediaries to validate transactions, reducing costs and increasing efficiency. Beyond cryptocurrencies, blockchain technology has the potential to revolutionize various industries. It can be applied to supply chain management, voting systems, intellectual property rights, and more. By providing a decentralized and transparent platform for recording and verifying information, blockchain has the power to transform how we interact and transact in the digital age. However, blockchain is not without its challenges. Scalability, energy consumption, and regulatory considerations are among the factors that need to be addressed for broader adoption of blockchain technology. Researchers and developers are actively exploring solutions to overcome these hurdles and unlock the full potential of blockchain. Investing and trading Bitcoin. Bitcoin has gained significant attention as an investment asset. We'll delve into the world of Bitcoin investing and trading, discussing the potential risks and rewards. From buying and holding Bitcoin to trading on cryptocurrency exchanges, we'll explore various strategies and offer tips for those looking to dip their toes into the Bitcoin market. Understanding Bitcoin as an investment asset. Before diving into Bitcoin investing, it's crucial to understand its characteristics and potential as an investment asset. Bitcoin is known for its volatility, meaning its price can experience significant fluctuations in short periods. This volatility presents both risks and opportunities for investors. It's important to approach Bitcoin investment with a long-term perspective and to be prepared for price swings along the way. Different investment approaches. There are multiple ways to invest in Bitcoin, and each approach comes with its own considerations. One common strategy is buying and holding Bitcoin for the long term, often referred to as HODling. This approach relies on the belief that Bitcoin's value will appreciate over time. Another strategy is dollar-cost averaging, where investors consistently purchase Bitcoin at regular intervals, regardless of its price, to mitigate the impact of short-term market volatility. Bitcoin exchanges and wallets. To invest in Bitcoin, you'll need to choose a reputable cryptocurrency exchange where you can buy, sell, and store your digital assets. Research different exchanges and consider factors such as security, user experience, fees, and available trading pairs. Additionally, setting up a secure wallet is crucial to safeguard your Bitcoin holdings. Wallets can be either hardware, physical devices, or software-based, online or mobile apps, and offer varying levels of security and convenience. Risk management and due diligence. As with any investment, it's essential to manage risks effectively. Bitcoin's price can be influenced by various factors, including market sentiment, regulatory developments, and macroeconomic conditions. Stay informed about industry news, monitor market trends, and conduct thorough research before making investment decisions. Consider diversifying your investment portfolio to mitigate risks associated with the volatility of cryptocurrencies. Trading Bitcoin. Trading Bitcoin involves actively buying and selling the cryptocurrency to profit from short-term price movements. It requires a deep understanding of technical analysis, chart patterns, and market indicators. Day trading, swing trading, and scalping are some popular trading strategies employed by traders. However, trading cryptocurrencies can be highly speculative and requires discipline, risk management, and continuous learning. Security and best practices. Securing your Bitcoin holdings is paramount. Practice good security measures, such as using strong and unique passwords, enabling two-factor authentication, and keeping your wallet software up to date. Be cautious of phishing attempts and scams prevalent in the cryptocurrency space. Consider storing a portion of your Bitcoin holdings offline in cold storage for added security. Remember, investing and trading Bitcoin carries risks, and it's important to only invest what you can afford to lose. As with any investment, seeking professional advice and conducting your own due diligence is crucial. The future of Bitcoin. What does the future hold for Bitcoin? We'll discuss the potential impact of Bitcoin on traditional financial systems, its role as a store of value, and the ongoing development of the Lightning Network to address scalability issues. We'll also touch upon regulatory considerations, institutional adoption, and the evolving landscape of cryptocurrencies. Mainstream adoption. Bitcoin has come a long way since its inception, and it continues to gain recognition and acceptance worldwide. As more individuals, businesses, and institutions embrace Bitcoin, we can expect increased mainstream adoption. This adoption could lead to greater liquidity, stability, and utility for Bitcoin as a currency and investment asset. Institutional involvement. In recent years, we've witnessed growing interest and involvement from institutional players in the cryptocurrency space. Major financial institutions, such as banks and hedge funds, are recognizing the potential of Bitcoin as a store of value and portfolio diversification tool. Institutional investment can bring increased liquidity and stability to the Bitcoin market, while also attracting more regulatory scrutiny. Regulatory landscape. Regulatory frameworks around cryptocurrencies are still evolving, and we can expect continued efforts by governments worldwide to establish clearer guidelines. Regulatory developments can provide greater certainty for businesses and investors, encouraging further adoption of Bitcoin. However, striking a balance between regulation and maintaining the decentralized nature of cryptocurrencies remains a challenge. Technology advancements. Bitcoin's underlying technology, blockchain, continues to evolve and improve. Advancements such as the Lightning Network, which aims to enhance scalability and transaction speed, could make Bitcoin more efficient for everyday transactions. Additionally, ongoing research and development in privacy-enhancing technologies could address concerns regarding transaction traceability and privacy. Global financial system disruption. Bitcoin's decentralized nature challenges the traditional financial system, which relies heavily on centralized intermediaries. As Bitcoin gains traction, it has the potential to disrupt traditional banking and remittance systems, providing greater financial inclusion and access to those underserved by traditional institutions. However, this disruption also poses challenges as regulatory and financial infrastructures adapt to the changing landscape. Technological innovations. Bitcoin has paved the way for the emergence of numerous other cryptocurrencies and blockchain-based projects. These innovations explore different use cases, such as decentralized finance, DeFi, non-fungible tokens, NFTs, and smart contracts. The continued development of these technologies and their integration with Bitcoin could further expand its utility and impact. Environmental sustainability. The energy consumption associated with Bitcoin mining has raised concerns about its environmental impact. As the industry progresses, we can expect increased focus on developing more sustainable mining practices, such as utilizing renewable energy sources. Innovations like proof-of-stake, POS, consensus mechanisms aim to reduce the energy requirements of cryptocurrencies while maintaining security and decentralization. In conclusion, the future of Bitcoin holds immense potential, but also poses challenges. Mainstream adoption, institutional involvement, regulatory developments, technological advancements, global financial system disruption, and environmental sustainability will shape the path ahead for Bitcoin. It's an exciting time to be part of this digital revolution, and staying informed and adaptable will be key to navigating the evolving landscape of Bitcoin. Thank you for joining us on this journey through the world of Bitcoin. In our next segment, we'll discuss practical tips for securely storing and managing your Bitcoin holdings. Stay tuned for more valuable insights and educational content. Remember to subscribe to Millionaire Advisor for more insightful videos on finance, investing, and the latest developments in the world of cryptocurrencies. If you found this video helpful, be sure to like, subscribe, and hit that notification bell. Thank you for watching, and until next time, stay financially empowered.